you've got a vast experience, not only working on the brokerage side as an investor side, but then also coaching other brokers and investors. What should investors look for when they're considering their first syndication?
Oh, lots of stuff, right? So agree with what the previous speaker said. Operator always is up on the top to make sure that you connect with the operator. I think more importantly, how they communicate, right? Are they easy to access? Are they local in the market where you're buying the property? A lot of those things that you should be looking at. When you try to reach out to them, are they going to return your phone call, right? Or are they going to respond to your emails? So those are all very important. Communication is very important, and look at their track record and how many other properties they have and what their credibility is. But I think more importantly, even more than that is, does their strategy agree with what you're trying to accomplish, right? So you can be doing a development project where you can get a high return, you're also high risk in the next couple of years. Or you can do a stabilized property where you have a stable return from day one. Or you can do a value add property to get maybe less returns in the first couple of years, but pick it up later, and when you sell or refinance, you get a higher return. So you have to look at what the operator is doing is in agreement with your own strategy about how you want to grow your wealth. So
That's really important because a lot of folks they'll narrow it down to the IRR, and especially if you want to go into these crowdsourcing, crowdfunding sites, I don't know, Cadre, Realty
Yeah.
Mogul, those guys, and then filter by return. It's not always. The high return isn't always a good thing for you.
Exactly. So that's exactly what I mean. That you have to look at. Okay, you can look at IRR. What is IRR? Right? It's because you have uneven cash flows, and it's kind of an annualized return when it's all said and done, when the property is sold. Now, if you want your money back sooner, then that may not be the best way to look at it, right? You may be looking at I'm not getting much of a cash flow for the first 3 years, but at the end, when they sell it in 5 years, I'm going to get a decent IRR, and I don't mind waiting as long as I get my return. So those are some of the things that you look at. But we always tell people, look at the market first. You should know which markets you want to invest in based on the fundamentals, right? I know this is, everybody talks about it, but it's a good reminder for people to look at to see, is the market improving? Is the population growth, the job growth, the new construction, average household income, median home price, are all those things better in the market? Because you want to invest in I think the first thing is to select the right market that you want to invest in. You're obviously looking for a landlord-friendly, business-friendly states to invest in, so that way there are no regulations or law changes that may surprise or impact your returns. Then you look at the location of the property and make sure that's a good location. So you start with the market, narrow it down to the sub-market and the location of the property. And then you also look at the property itself. Does it make sense, right? So I think some of these things that passive investors should do at least some due diligence to find out, is this what I want to invest in, right? Is it do I want to invest in a value add play, knowing that I'm taking a risk along with the operators of hey, this may play out pretty good for me, or it may not, right? So, or do I want to go into a stabilized investment where I can get a preferred return and get a cash flow from day one? So those are some of the things that you look at. And obviously the last one, but not least, is the operator, right? See, do you like the operator? Can you get along with the operator, right? And I also tell people to look at, a lot of passive investors want to become active, or they want to become syndicators or co-sponsors. You also look at, is this the team that I want to work with? So in my own example, I invested with certain groups, knowing that those are the people I may want to partner with in the future as co-sponsors. So I have the same personality, or I like them personally. So that's another thing that you have to look at. If that is your goal, is to get into a co-sponsorship or becoming a GP, then you might as well invest with people that you want to be business partners in the future.